I'm Patrick Camuso, founder and managing director of Camuso CPA. For the past decade, crypto investors have thought if I filed my tax return, maybe my accounting's not perfect, maybe it's incomplete, but at least I tried. This should be good enough. At least I'm compliant. And although that's never fully been the case, it is going to become increasingly more risky to take that position as we move forward. And that's what I want to explain in this video today. So, I've been doing digital asset accounting and taxes for the past decade, long before 1099 DA existed. And I've worked with all types of investors with all types of accounting and tax challenges. And this is usually what I've heard a lot of times, especially from new clients. Yeah, I filed the past 5 years. I don't think it was perfectly accurate, but at least I filed. At least I'm compliant, and things of this nature. So it's a common investor belief. I filed every year. I'm done and I'm compliant. And what's changed isn't the tax law or anything specific, but it is the fact that we have these 1099 DAs that are going out. And these 1099 DAs are going to introduce third-party reporting that, number one, it's going to be matched to your reporting on your tax return, but that number two are going to be incomplete and required for you to reconcile against them as a taxpayer, specifically related to your cost basis information. And we're going to go over how even prior year calculations can come back and impact your current year reporting related to your cost basis and related to the 1099 DAs overall. At the end of the day, the point of these 1099 DAs is it's going to make you reconcile your entire digital asset activity to these forms in order to properly report your cost basis. Crypto tax compliance has been informal. There hasn't been any standardized broker reporting. There was no proceeds level matching, no systematic reconciliation between the taxpayers' file data and third-party reporting. And on top of that, people were using different types of data, different formatted exchange reports, early stage softwares. There were advisors without crypto native experience or accounting skills advising people on how to file these, oftentimes with inaccurate advice. So this has been the landscape that people have been dealing with for the past decade when it comes to crypto. And it's maturing now with the 1099 DA. And the 1099 DA is going to be the first big stress test on investors, on taxpayers with these historical holdings. Because like I said, all of these historical issues are going to start to shake out when it gets down to your cost basis calculations, since they're cumulative in nature. So this is a big transition for digital assets. And at Camuso CPA, we call this the digital asset compliance era. This is a structural shift that we're seeing in digital assets in general. And this is across many different factors in regulatory bodies, but the IRS and tax authorities are a big focus. In the 10DA, like I said, is one of these big structural shifts where we're seeing third-party reporting, automated matching, reconciliation-based enforcement. And this is now creating an expectation that the reported outcomes for taxpayers that are reported on Form 8949 and Schedule D have to reconcile cleanly across the information that the IRS has, the methodologies that the taxpayers using to calculate their cost basis data, and the documentation that they're able to produce to substantiate their calculations and their overall tax positions. So, before the 1099 DA, again, everyone was filing with self-curated data, overall in a low visibility environment when it comes to their returns being looked at or scrutinized in most cases. And, just because maybe you filed for years under these circumstances and haven't had issues, that does not necessarily mean that your cost basis calculations are accurate, what you reported is accurate, or that you're not going to have future issues related to this. This filing your return and not hearing from the IRS after, just not having any notices or any issues doesn't necessarily mean that things were done accurately. So silence from the IRS does not mean that your return was prepared accurately and any absence of enforcement doesn't necessarily imply that you have defensibility for your accounting records and your cost basis. And you don't want to make that mistake if you're an investor that maybe have been attempting to be compliant, but it's been imperfect. If you're sitting there thinking you may fall into this boat in that your cumulative cost basis calculations are inaccurate, it makes sense to fix this to avoid future issues. So, what is the 10DA really going to do? It is a broker filed informational return. Its narrowest purpose, especially for 2026, it's really only going to be reporting proceeds on broker effectuated digital asset dispositions. In the future, it will start to report cost basis information on certain digital assets that are going to meet certain fact patterns, but many times this cost basis information is not going to be present. And for 2025, in most cases, you should expect it, or for 2025 tax year that being reported in 2026, you should expect that the cost basis data usually is not going to be there. So, the 1099-DA is not a complete transaction ledger. It's not something you can just blindly take and put on your return and assume is accurate. And it's not any sort of determination of whether the 1099-DA is accurate against your accounting either, because the 1099-DA is incomplete in many cases. It's not deterministic. Just because it's different than what you have doesn't mean that it's accurate, but it does mean that you're going to have to reconcile these and be able to substantiate the positions that you take when you're reporting your cost basis that is different or that is not reported on the 1099-DA. So overall, the 1099-DA is incomplete by design, but it is sufficient enough with the data that is there to start to initiate enforcement on taxpayers and start to scrutinize their transactions more closely. And this is what we're anticipating at Camuso CPA. And obviously, the cost basis scrutiny and the audits are a deeper risk, a longer term risk, but that's unlikely where this really begins for taxpayers. Most likely what we're going to see is enforcement driven by automated matching, where the information returns are ingested. Taxpayers file their returns. The automated matching process begins and it starts to compare taxpayer reported proceeds versus the proceeds reported on the 1099-DAs. Then from there, where there are discrepancies, they'll trigger correspondence notices, and then the burden is going to be on the taxpayer to respond to those notices. And if anything is unresolved or remains unresolved after the notices, that's when you can start to see escalation from there. So this is where it's really going to start, is with your reporting matching up to the 1099-DA. And where it's not matching, are you able to substantiate the tax positions that you take? So if you get a notice or you get scrutinized even deeper than that, are you able to defend your positions and have strong audit trails that are showing how you arrived at your calculations with methodologies that are acceptable by the IRS? So cost basis is the real breaking point when it comes to reporting your digital assets. And the 1099-DA, to a large degree, is going to start to, uncover some of these discrepancies. So again, the historical records is very challenging for taxpayers. And this is something that we work on at Camuso CPA every week, reconstructing digital asset histories, doing the historical accounting and the cost basis reconstruction for investors. And, sometimes you got to go back 5, 10 plus years. We're doing a cleanup now for a client that started first purchasing Bitcoin in 2014. So, these assets were acquired before tracking existed, before standardized record keeping, transferred between, many old wallets and exchanges. So it is no small task to reconstruct this basis, but it is imperative if you want to accurately report your taxes and not overpaying them because you don't have records related to something that actually happened in the past. So there is this historical accounting debt for most people. It's due to many different reasons. There's just an overall structural non-compliance in the digital asset space. This is no secret. Even the IRS at times has cited up to a 75% non-compliance rate. So there is a high degree of non-compliance in the digital asset space. And usually when I'm talking to a new investor that's thinking about working with Camuso CPA, the story usually goes, yeah, I got started in X year, sometimes it's 2014, 2017, 21, it varies, but these people have gotten started 5 to 10 years plus back and they haven't done their accounting at all. In some cases, their returns haven't been reported, not fully accurate. In some cases, they haven't been reported at all. So there is a structural noncompliance that investors are going to have to address. And, the 1099 DA is going to be one of the reasons people start to realize that, this isn't just going to kind of go away with time. Again, the cost basis is difficult to reconstruct in many cases due to the documentation and early limits that we've had in the ecosystem related to reporting and transaction records and everything like that. So another question I get sometimes from, investors that are wrapping their head around this and trying to figure out how are we going to address and deal with this issue? They start to ask questions around, can we just start clean in the year that the 1099 DA is going to start reporting? And can we just maybe not worry about all this historical activity since it's so burdensome to go back and do the historical accounting and cost basis reconstruction? And, the answer to that question is usually no. And it's because cost basis is a cumulative process. If you have purchased something in 2017, let's say you purchased Ethereum in 2017, and then since then you've been making more purchases at different price points, maybe making exchanges or other forms of dispositions. That basis is cumulative year over year. You're going to have a certain basis at the end of 2017, and that's your starting point for 2018, and onward until now your starting point for 2026 is what your ending basis was in 2025, and that's what your ending basis was in 2024. So this unresolved historical cost basis data is not going anywhere. And the 1099 DA doesn't expose this directly, but when you go and dispose of an asset, it's going to get reported on 1099 DA. And in many cases, the cost basis reported is going to be zero. And then the burden is going to be on you as a taxpayer to report the actual basis and substantiate that. And that's why you're going to be stuck going back and having to do these historical calculations so you get an accurate cost basis calculation. Now, there's another important consideration outside of just getting the historical counting done and getting this cost basis reconstructed, and that is that how the accounting done has been clarified and changed over time, most notably with Revenue Procedure 2024-28. And what this did was it shifted how digital asset accounting is done, where in many cases it used to be done on what's called a universal basis, where you would pool all assets together in one ledger and apply a cost basis methodology to it. Now it's shifted to an account level tracking methodology, which means that you have to apply an accounting method not only on a per asset basis, but on a per account and per wallet basis. So this can deeply impact cost basis calculations. And I've found that many taxpayers are still not aware of this revenue procedure. And to the degree that you're unaware of it and you haven't followed the transition process to go from universal to account based, and you're not now doing the accounting under the account based regime, you may have inaccurate cost basis calculations. So this can lead to people that may have reported their returns in the past, may have even done their accounting in the past, but haven't done this shift with the revenue procedure to still have inaccurate cost basis data. This revenue procedure also outlines FIFO and what's actually required if you do want to use specific ID, which requires pre-sale identification of the tax lots that you want to sell. So there's a lot that this revenue procedure did to impact how cost basis is calculated. And to the degree that this is overlooked, cost basis calculations can be inaccurate. So the other big elephant in the room is why software alone can't solve this. And there's, many good cryptocurrency accounting softwares out there. And to a degree, if you're transacting in digital assets, you're going to have to utilize these tools. But software performs calculations. It doesn't substantiate your tax positions. It doesn't document any assumptions or methodologies that you're utilizing. It's not going to establish a custody lineage for you or help you with substantiation or help you reconstruct your missing history. Basically, the software is only as good as the inputs going into it. So to the degree that data is incomplete or the data is not fully accurate or it's miscategorized, you're not going to be able to fully rely on software. And when it comes to tax reporting, reliance on software does not relieve taxpayers of their record keeping obligations. So you can't blindly rely on these softwares, but you have to leverage them. But you have to make sure that you're following a methodical process when it comes to your data completeness, data categorization, reconciliation, due diligence, and overall documentation around your tax positions and your assumptions. So, the worst time to discover that you're behind on this or that you have an issue with this is when you have a tax notice in your hands. These notices are going to operate under compressed timelines, and by the time these notices arrive, it's a much different scenario than if you're able to get ahead of this and do these calculations on your own terms. The, accounting work to establish a defensible basis and go back and do all this historical accounting is no small task. It can take many months, and it's rarely achievable in the time span of you getting one of these tax notices. So going back and doing the historical cost basis reconstruction and accounting is something that you want to do now and get out ahead of this. So recently, we've also seen Coinbase announce that there's going to be historical cost basis submission windows for taxpayers related to their historical holdings. This is a new development that we're watching closely at Camuso CPA, but it is something that we're anticipating from exchanges because in the future, they're going to have to report this information on the 1099. But, this implicitly acknowledges that the taxpayer is on the hook for providing this data and for the accuracy of this data. Just providing this data to Coinbase, it needs to be accurate. And again, it's going to necessitate this historical cost basis reconstruction. So it is imperative for tax reporting purposes to get out ahead of any audit issues, but also just for basic compliance if you're holding historical assets and you're within a submission window to submit your cost basis to the exchanges, you need to be prepared with this data and your cost basis needs to be calculated accurately with the correct methodologies. So, who is this going to impact the most? Obviously, this impacts anyone transacting in digital assets, but some profiles are higher risk than others. Long-term holders, multi-exchange users, DeFi participants, founders, early adopters, these are the taxpayers that are going to feel this the most and have the most complexity related to this. If you are, a single exchange user with very limited activity, most of the reconciliation is not going to be that different for you since everything's contained on one platform. But once you start introducing historical assets that have, long lineage or just, multi-platform or non-custodial activity, that's when we're going to start to see more complexity with this. So, the question is going to be shifting for crypto investors from did you file to is what you filed, can it be defended under a modern reporting and reconciliation system? Is your data complete? Do you have audit trails? Can you substantiate your positions that you've taken on your return related to your cost basis data, including the methodologies you utilize to calculate it? So Form 1099-DA is the first real stress test of whether this historical crypto activity is going to be able to survive modern compliance scrutiny. And this is the demarcation of the digital asset compliance era beginning. And we're here at Camuso CPA to get investors, to get taxpayers, to get founders and business owners through this with their bottom line intact, with their crypto still in their ledger. And we do that through accurate accounting, proactive tax advice, and accurate tax filings. So if you are someone that needs to get in alignment for this 1099-DA, you need to go back and do your historical accounting and cost basis reconstruction. You need to file your taxes, or you need to do some tax planning around the revenue procedure and compliance readiness related to the 10, what we can assist with at Camuso CPA. So if you do need assistance with that, you can contact us at camusocpa.com, and I'd be more than happy to discuss that with you. So until next time, I'm Patrick Camuso, signing off.